All right, traders, a very warm welcome. I'm Devang Mehra from the Financial Analyst, and we're here to discuss about what can we expect in the fourth week of March in the Indian financial markets. So before we get started, lots of things are going on. So I'll, to scuttle you through what's happening in my life, etc. So you can see a new look. Let me know how's this look suiting me. I want to try something new, so I'm keeping the old mustache and cutting the scruffy beard. So let me know in the comments, is this a look that would suit on me? Should I keep it, or should I get the old beard back, or should I chop the mustache off and have no beard? So yeah, new look, new things happening in my life. So let me know in the comments section below, and I want to read what everyone has to say. Secondly, new surroundings, right? I'm back home. Yes, that's all of a sudden, I know, but there's some health problems going on in family, so I had to be back, and that's the reason exactly why I could not upload videos in the last 1-2 days as planned. I had to be away. There's a couple of things happening in my family health wise, so I had to rush on priority. I just took a flight today morning, and I'm back home in Punjab, Amritsar, and I'll be here for the next 2-3 months. So you have to get used to my old surroundings, which is in my house, in my room. But yeah, I'll be moving. We'll be moving to the office on Monday. So a couple of changes going on. So I just wanted to keep you all in the loop. So my activity will be reduced, but it will be my aim to be as active as possible, depending upon how things are at my house. That's number two. Number three, we made some good money on Friday. I'm meeting you all after 2 days, so I just want to talk about the Friday markets for a bit, because eventually we have to start from where we left off. So Friday, Thursday, I've been telling you this for the last couple of days, and I always tell you, we are in a bull market. India is a bull market, and I always tell you, there will always be some kind of news out there which will demotivate you, which will put off the markets for some point of time, but eventually the long-term trend remains intact. So when I say the long-term trend, I gave you this example. I said that, if you look at the time period from April all the way till March right now, you can see that we have always made higher lows, and this formation has not been changed. It's not been altered. So as long as this higher low, higher high formation is going to be maintained on a bigger chart, which is a daily chart, obviously it's maintained on a weekly chart, but as long as it is maintained, you have to remain with the trend. The biggest mistake people do is that they go with the secondary trend that we call in Dow theory. They move in this trend, and when this happens, when this kind of correction happens in the market, people become bearish and they think a big crash is coming. It's happened every 1 month. You can see all these small scuttles are happening every single month, but eventually they don't sustain. And we've seen this happen for the last 1 year, and it's happening again. Some kind of news is always out there. Sometime we had the India-China skirmish. Sometimes it's about, any news. You all are aware of that. So I think the only news right now is about the concerns about the taper tantrum, with what the Fed is going to do with the interest rates. What should we be concerned about with our bond yields in America? 10-year notes, it touched 1.75 highs, currently at 1.73. That's the concern right now. Inflation is a little bit high on the upper end. It's been going up for the last couple of months. And what will be the RBI's response to all of this? So these are the concerns right now. The other concern that I'm seeing now is the rise in COVID cases. We all forgot about this in the last couple of months, but it's back. And I think it's becoming more and more serious now. Nagpur is on lockdown. I'm back in Punjab, and we have curfew from 9 to 5 in the night in most of the cities in Punjab. And I think I saw the news today that even Maharashtra has got the single day highest spike in the cases today after a long, long time. So all these things are coming back, and there are no seats available. There are no beds or rooms available in hospitals. So right now, when we're sitting at home, we think things are okay, but when you go to the hospital, if you have been to the hospital in this last couple of days, you know for a fact that there are no rooms available and there are no doctors available to tend to you. So all these concerns are there. And these are the things that are bearish on the market, keeping the markets down. On the positive side, we got a good news on Friday. We got Moody's, the big rating agency. Moody's has upgraded Nifty, Indian GDP target. So it was, I think, expected last time when they came out with the review. I think they were expecting an expansion of 9%, but now they have re-estimated and they have increased to 12%. That's one good news that I see. That's out there in the market. I want to take that as a very good positive because India is one of the leader of the emerging markets. I also sent another message on Telegram. I said that emerging markets, yes, they are at highs. And if you see the Morgan Stanley Emerging Market Index, you can track it on Money Control. It's been consolidating at the highs for quite some time. And a lot of people ask me that, is this, the time for a reversal in all the emerging markets? I don't think so. I don't think so personally. I think we have a very good room left in ahead of us when we talk about the emerging markets, and India will be leading that rally. Yes, I read a lot of reports, good reports, and one of the reports mentioned, I read on Friday, that the emerging markets are going to stay afloat whether you like it or not, which is a good sign for India. And you might see a shift from growth stocks to the value companies. That is one shift that we can see in the coming sessions. But eventually we are a bull market, and I don't think the bull trend is about to reverse. The second reason why, so let me talk technically. I've given you some fundamental answers, but always you can skip through if you are not interested. But I feel you should listen to these things, because eventually these are the logical things that you need to be aware of when you're analyzing the markets. If I talk about technicals, we have a simple saying in Dow theory: as long as the previous lows are maintained, the trend is still intact. And on Thursday video, I told you one very important thing. I said, notice what will happen over here. The March 1st week, this was the last, good low that we saw in the market. And right now it has been tested in Nifty. It is also coincidentally a very big round number, which is 14,500. So I would say, going forward, what is my view? My view is simple, that 14,500 should not be broken, and you should not close below 14,500. That's one thing I want to add, because this is my previous low. So if in the coming days this 14,200 low is broken, that would mean that somewhere the markets are getting weak, and you could then move towards 13,600 budget lows, because then this could be considered as a bigger distribution taking place. But I can't call it a distribution right now because my lows are not broken. That's a point you have to remember. So what could be a strategy? I want to lay down these points because markets have been heavily volatile. The volatility you are seeing right now is massive, and you're not able to survive on intraday basis by keeping the same stop losses. For example, earlier what one could easily do on an intraday basis was have a 20% stop loss on Bank Nifty or Nifty. So for example, if you have a good 200-point premium on Nifty, you could just keep a good 40-50 point SL and you could sustain in the market. But that is not the case now. Now, if you want to sustain, these are also less, because market goes down 100 points on premium and then goes up 200 points on premium. So you are not able to sustain on intraday basis by keeping those same stop losses. So my view is, guys, scratch your heads. Try to understand what is the longer term picture. If you think we are bullish, so I'm not going to propagate views. If you think you are bullish, go farther away in expiries and take a trade there. What people make a mistake is, first of all, you play out the money options. That's the biggest mistake people make, because out the money, has no value. Most of the people, you take out the money options because it's very, very cheap. So for example, let's say people take 15,000 call options. And the biggest mistake they do is they take it in the next expiry, let's say 1st April expiry. Let's assume 15,000 call option costs 50 rupees, or let's say 100 rupees. I'm taking a raw example. I don't know what the price is. 100 rupees. This means that you will make money only if you are going above 15,100. This is what people don't understand. 15,100 is your break-even price. You might be paying less money right now, but eventually you will not make money because time value is, because right now there is no intrinsic value in this option. It's all about time value, and time is going to decay to zero. So please, guys, understand. I always say this, it's about safety in the market. Number one, it's about cost. There's always a cost in life. If you want to pay less money, the chances of you to win are less. The delta is less. So the first mistake I would say, that if you're new to options or if you're doing options, is please play in the money. It's expensive, but you will be sure that you could get out some money out of it. The second thing is, because intraday is difficult. So for example, I told you very clearly, Friday will be very slow for me. I did a loss on Thursday. So Friday, I'm not going to be so active. But if you are being active, please, first of all, don't do a lot of intraday trading right now. Even if you are doing intraday trading, it's very, very important that you just scalp it out, because we have no idea. If you see the last couple of sessions, I would say last entire month of March, it's been so volatile and the movements on both the sides have been massive. And I think Nifty has been moving up and down 200 points every single day without fail. So we never know which way the markets are going to go. Second thing will be, grab a view, think about what you think about the next 10 days in Nifty, do your analysis and take far away expiry. So for example, I told you all to buy ICICI 400 calls, and I made some huge money on this. I made a loss on Thursday. I told you it's about being patient. If you trust your process, if you believe in yourself, you'll recover it. And on Friday, we recovered good 1 lakh rupees. And all the banks just boomed, exactly what I told you. So if you made some money on Friday, let me know in the comments. I want you to hit a like so I know how many people made money on Friday. And for if you didn't trade, but if you liked the idea I gave you on Friday, let me know also by clicking the like button. And if you're new to the channel, subscribe, hit the bell, you know, all that formalities. So try to follow these two advice. Please don't play in the immediate expiry, because you're gonna make a big mistake. Right now it's so massive, we don't know what's going to happen. So please take these advices. Now, technically speaking, 14,500 approximately, this low is a very, very strong point. If this low is broken, this will really bend the trend on a closing basis. That means on a closing basis on a daily chart. So that would mean that trend will bend. So am I trying to say that I will get a big 1,000 rupees fall in one go? No, that will not happen. I'm not saying that will happen. But what will happen is that once this point is broken, whenever you get any kind of pullback, you will sell on rise then. Then you will sell on rise, because then every pullback will be a shortable pullback. So if you are a bear, this is what you have to look for. If you get any closing below these levels, your market converts into a sell on rise, and then you could go for targets of 13,600. That then becomes a very, very strong support. The reason I'm saying that also, I don't think it will come in this expiry, because I think we have a lot of open interest at 14,000. It's a very big round number. That will not happen. But if this happens, 13,600 is achievable. And I think this will be a very, very good place then to buy stocks, to buy value stocks. Please forget intraday for some time. Build your portfolios, because when you are getting markets at such attractive valuations, you have to really dig into stocks, get them. All companies, I told you this on Thursday, and people listen to me. A lot of you listen to me, and you really made some money on Friday, not only in option but also in cash. I told you very clearly, Reliance down 10%, HDFC down 10%, ICICI down 15%, Axis down 10%. So whenever a stock is down 10%, historically, if you see, that's the place where the big banks look for adding or averaging or making a new purchase. So you have to do that. I told you another point. I told you very well that on Friday we have the FTSE rebalancing. And I've told you it's all about observation. I told you that on whenever in last we always have these quarterly rebalancing that happens. The last time was the MSCI, Morgan Stanley Capital Market Emerging Index, a rebalancing. And I remembered clearly what happened on that day. I made these points clear. Yesterday on Friday, we were expecting 1 billion inflows. And I told you markets are going to go up. I gave you this level on Bank Nifty also, 33,800. If you all remember this, let me open the chart of Bank Nifty. 33,000. This was the level I told you. I think it was around 2 o'clock. And we were getting multiple rejections at 2 o'clock. I think this was this time. Yeah. So at 33,800 levels. So I told you that as soon as this level is broken, on a 15-minute closing basis. Around 2 o'clock, you have to make a purchase. And we made some huge money on that. And you literally rallied about 500 points intraday. So I hope you made money on that idea as well. If you did, let me know in the comments box. Hit the like option so I know that what you have done in the markets. And I hope you're doing good. These were a couple of points that I talked about. And the equinox playing in, I think it played out really, really well. I was expecting a bottom of the market to be formed over these days. As I explained in a lot of my videos, that 20th March is an equinox. So is this the bottom of the market? We will never know, but we have to be proactive in what we do. So I have made some purchases. As I said, we have some good stock options in our account, but be careful. The overall trend is also bullish, but be careful. The reason I say that is right now, this is the first pullback that I'm seeing. If you all are pullback traders, supporters, you should know this phenomena. Right now, I cannot say the trend is bullish, right? The dates could play out. That's not my concern, but I need to give you concrete logic. There will still be selling coming in. I'll explain this point with data very well. And on Friday, I told you that data was positive. It was bullish. You will get the markets higher. I have delivered. So I've done my job. I gave you a SL on Thursday, but I've delivered on Friday. So if you aren't on my Telegram channel yet, it's a free channel. I think it's a good opportunity that you join that channel now. You could go to Telegram, search the financial analyst, or my channel name is TFA Investment. So you can search that out and join that channel. It's free for the time being. The second thing is, first of all, thank you so much for your support. The Architect, we launched 2 batches, the personalized mentorship that we do. We launched 2 batches, 20 people each. It's fully booked out. We are starting tomorrow. So thank you all for that. And I can't wait. My team can't wait to mentor 40 people that we have chosen. So thanks a lot for that. Also, that's all 40 people in 1 week. That's an outstanding turnout. Didn't expect that. Also, the Bold project has seen really, really good turnabout. And I think in the last 1.5 weeks, we've got about 50 registrations on the Bold project. So wonderful, guys. So if you are starting out your journey in the stock markets, you should definitely join the Bold project. It's a very reasonable program. It starts at 2,500 rupees, and it's a 1 year membership to our Discord community. You get our 20 hours videos on stock market training, and I think it could really change your life. So if you're interested in any of these programs, let me know in the comments, or you can WhatsApp me right now at 8080-343-031. So now let's get started with what we can expect in the markets. Just believe in yourself. That's my view. And first, let's talk about the data. I think it's always important we discuss the data first, and then we'll come on the technical charts and see what I'm looking at. I'll discuss some very, very important points, so make sure you watch this video. So the data is good. I'll again say the data is good, but is the data God? No. Data can also be manipulated. Always remember this. I always show you the data, and somehow or the other, I make sure the data, whatever it tells me, I deliver to you. We might hit a stop loss, but always remember, a good trader is a person who can give you 6 out of 10 trades. So if you are trading independently, you should get 6 out of 10 trades. If you can get that, that's good. 4 out of 10 trades should be a good stop loss. So your aim should be for this as of now. Secondly, whatever ideas I give you, it's up to you whether you want to take it or not. Because markets have been difficult lately, and you've seen the intraday volatility. So my concern is, I see a lot of ideas. Sometimes I don't understand the market, and it's good to accept that. Even you, when you're trading, you should accept that your markets are not making sense to you. Because if you trade in a market that does not make sense to you, you will just blow your account. You will do a loss, which will be magnificent. So for example, I told you on Thursday and Friday, I said markets are not making sense. So I don't want to be very active. But when I saw that 33,800 level on the charts of Bank Nifty, I knew that I wanted to buy above that. So I gave that trade. So over the coming days, markets will continue to be volatile. Also, we are coming into the monthly expiry. No big events are structured in India or outside India in this coming week, which I'm aware of. So I think the event to watch out for will be the monthly expiry on Thursday. So if you're a new trader, try to not trade on Thursday. Otherwise, everyone knows how the monthly expiry volatility plays, keeping that in mind. So if I'm trading options, I won't trade this expiry. Either go to April end expiry, or if you want to take a risk, go to 1st April expiry. So disclaimer is always there. Whatever ideas I give you are for my own, it's my own personal ideas. What I will be trading does not mean you have to trade it yourself. Always consult your advisors and always use your own analysis and risk reward. Talking about the data is good. It's been good for the last 2 days. I'm happy for that, because always in the market, you have to be hopeful. You can make money really fast when the market goes down. You all are aware of that, because whenever the market goes down, everyone panics and everyone exits. And no matter how good the profit they are in, they will exit because they don't want to lose all the money. But when the markets go up, they go up very, very slowly. So always be hopeful in the market, because on the put side, on the short side, you make money quick, but that does not last for life, because eventually we are in a bull market. I've told that in the starting. Let's look at the data. Index futures, clients. So clients have today increased index futures by 2000 contracts. So they are bullish again. It's a very negligible figure. So I'm not really concerned about that. What I'm concerned about is that their figure has come down. If you see the last 2-3 days data, from 26,000, 30,000, it's come down 21,000. That for me is a good signal for the markets. Clients are reducing longs. That means that markets have the potential to go up. Number one. Again, I'm telling you, if you missed my Thursday video, please remember, as long as this figure is in green, you will always get some selling on the higher levels, because clients are hearing call, are bulls. So as long as clients are bulls, you will always see some selling coming in at the higher levels. So if Monday market gaps up, I don't know where it'll open. I'll discuss that. But even if it gaps up, you can see some good selling happening. You will see volatility because of this. Remember this point. So if you want to be an aggressive bull, make sure this figure is in red. Whenever this figure comes in red, you will see a huge rally in the market. So this is one good figure for the bulls. If you see the FIIs, I think it's a very good job that they have done. They were about long on 18,000 contracts on the index futures. Now they have gone to 33,000 contracts. A good 14,000 addition that they have done in the past couple of days. So I'm happy to see that the FIIs are getting interested. This could be due to the FTSE inflows, but as I said, the big banks, the investment, the funds, the hedge funds, etc., they look for 10% falls. They look for 15% falls, because at 10% fall, they start to buy. At 20% fall, they start to average. That's how they work. So this is one thing I am enjoying, that the FIIs are getting more and more interested. Let's look at the calls. Index calls. If you can see the client data, clients are holding 1.5 lakh contracts in index calls. So they were so bullish, but now they are short on calls. So they are short on calls by huge contracts. So that's about 59,000 contracts day on day comparison. From 28,000, they've gone down to 30,000 shorts. So they are bearish, which means that the markets have a potential to go up. So this data tells me, as of now, this data tells me that tomorrow, even if you, let's say, gap down, you will get some gap filling. So wherever you open, there will be some kind of momentum on the upside, because the data suggests so. I will explain these things in detail on the chart. FII's calls, it's gone up considerably. They are again around 70,000 contracts. That's a very good signal. So FIIs are becoming bullish. Now, the good thing is index puts have cooled off. You can see from 1.9 lakh, they are now at 1.7 lakh. It's cooled off 20,000 contracts. Another thing to see was, see the call and put ratio. This was around 1:3, 60,000 calls and 1.9 lakh puts. But now this is very close to, no, it's about 1.2:5, 2.5, 1:2.5. So this is one good thing again I'm seeing in the data. Now there is not one call for one, there is not one put for 3 calls. Now it's about 2.5 ho gaya ratio. That is one thing you have to keep in mind. So the data is becoming good. If you look at the stock futures, that's one very important observation. It's again gone above 1 lakh. I always tell you, the stock futures don't lie. Everything could lie, because eventually stocks is something which makes the index can lie, but stocks will never lie. So today, good thing is, clients have reduced stock futures. They have gone down on stock futures. That's a very good thing for the bulls. And we are back above 1 lakh in stock futures. That means the FIIs have increased about 23,000 contracts in stock futures. That's a very, very positive signal. If you have been observing the data with me in the last couple of days, this figure has been below 1 lakh, I think, for the last 1.5 weeks. And now after 1.5 weeks, it's finally back above 1 lakh, and quite considerably. Again, it could be because of the FTSE inflows, but this is a good signal. So the data is very, very good. I think I'm happy with the data, which tells me that I will, no matter what, get the market on the upper end tomorrow for sure. Now let's look at the charts and do some study. Now this is one image that all of you must have seen on Telegram. I made sure I sent this on Telegram, and this is exactly what really changed my mind. You know, when markets the other day, it fell down, I got really scared that, you know, we might see 14,000. This is the chart. It's not my chart. One of the community members, a very old client, Chetan from Delhi, he sent this out to me, and I'm absolutely stoked. The reason is as follows. Number one, we have a very good long-term trend line coming in from the October lows, and you can see how accurately these levels are holding. So yesterday we have taken support right over here. Also, it was the equinox. So is this a coincidence? I don't know. We'll see. We'll see how it plays. Secondly, what Chetan has done is he has taken a Fibonacci ratio. He's taken the highs of this period and the budget lows. And exactly at the 618 retracement, yesterday we have halted. Not only is it the 618 retracement, but also it is the confluence of this long time support that is coming in. If you are a Fibonacci guy, you know very well that a trend is in force as long as the 618 is not knocked off. So if I close below this 618, that will be really bad. And that could, as I said earlier, that could open up the levels of the pre-COVID. Sorry, it could open up the budget lows. But you know, this is a very good signal. We have taken support over there, and that's a very, very good thing for us. That's the one thing I sent to you on Telegram. I hope you made sense of it. The second thing is, on the chart, we have taken support at these lows. That's a good signal. The candlestick that I'm seeing right now is a piercing candle. It's also called, it depends upon what country are you in, it's also called the counter attack, the lines. So you opened gap down, you opened a good gap down, but you have closed 50% or more of the previous candle. So I would have said that bears are very strong if I closed 50% or below this candle, the big red bar. But today, you know, we have closed at 744. Even SGX is doing good. So, you know, things are looking okay, reading the chart. One thing that I am not happy about is, I'm not saying happy about, but one thing that's out there, as I said, the clients are still long on index futures. Number one, that means selling will come on the higher levels. Number two, you've got a very big fall in the market. Number one, you are getting some kind of pullback. Is this a reversal? I'm not sure right now, right? There are all these astrological reasons, but please ignore that. I am not sure if it's a reversal, right? So it's always possible that at higher levels, you might get a selling. Keep that point in mind. So if tomorrow you are getting a gap up, it will be advisable you book some profit. If you want to hold, but please partially book profits, because I am not sure if it's a reversal or if it's just the first pullback that we are seeing followed by a break of this level. Because if you have been watching our videos, or if you are a client of ours, you always know I talk about multiple levels being tested. You can see something happening over here. You can also see a double top being formed over here. Right now, you know, we are not sure where the markets are going to go, but we need to be aware of both the scenarios. Right now, I'm in no shorts, right? Because of what happened on Friday, it has literally just obliterated the shorts, and you know, they must have lost big time, but doesn't mean it can't continue. So let me just look at the global markets for a bit and understand where things are. Yield has cooled off a little bit from the highs. The small cap in America has taken support. It's seen a good candle. The Nasdaq US 100 given you a good inside day. So the rule with inside day is whichever side it breaks, it can give you a momentum. So what I'm trying to say is that tomorrow, if on the Nasdaq you break these levels, the low of the inside day, you could get a big sell-off. that could be bad for the IT stock. At the same time, if these highs are broken, you can also get a good reversal on the upside. So it's an indecision bar on Nasdaq, but it's an inside day. If you look at the S&P, it's again an inside day. So some kind of confusion, some kind of indecision is being seen in the American markets. The Dow has fallen down 300 points. It's probably being showing some kind of a time correction and a price correction so that the RSI cools off. So American markets not very great on Friday. It was doing very well, but some news triggered a sell-off in the end. Dollar index also is at highs. That's another thing to be concerned about. You did get a good 92.2 levels, but it failed, and we are back in this range that we have formed in the last couple of days. So what we have to see is which way this range will break on a daily basis. If the range breaks on the upside, some correction will be seen in India. If this range breaks on the downside, you will see a good bull rally for the coming sessions. As long as this range is maintained, you will see both sided movements. Needless for me to say. So now coming back to Nifty, Bitcoin's also around 1.5% down because the dollar is doing well. So what is my plan now? My plan is very simple. I am not going to be focusing too much on intraday. I have explained the logic. It's a tough time. If you are doing intraday, just catch a small piece of the pie. If you have a pie, 8 pieces, just grab one piece and get out. You don't need to catch the entire movement. So it means that if you're getting 30, 40 points on Nifty and without any effort, get it and get out, because we never know which way the markets are reversing. So just keep that point in mind. Hopefully it will help you to make some money. If I get some good tradable ideas, I will let you know what I do so that everyone can make money and we maintain our consistency and get back with our streak. With that being said, let's see where Nifty opens tomorrow, because Nifty is doing fine. Reliance did very well, and Nifty is doing fine. It's taken a support, but it's Bank Nifty which is not looking so strong. I have taken a banking call, that's upon my risk. But Bank Nifty, the support was over here. So you might see a good resistance coming in at 35,000. So on the upside, 35,000 still remains a hurdle. It's a round number. Plus, if you all remember, it took us a long time to break 35,000. So this level has to be, maybe when we get this first pullback, you might get some selling pressure at this price, and maybe then we continue down. We don't know that, but our job is, let's say I'm getting a big gap up tomorrow. I want to observe what happens at 35,000. If this level comes, I think it's an amazing place to book profit if you're in longs, because we still are under some pressure. Okay. So talking about Nifty first, then we move to Bank Nifty. In Nifty, it's a good day. It's been a good day on Friday, right? So because of this day, every person who's been a buyer has a stop loss somewhere at this point, at the lows of Friday. So until that is not knocked off, you will always get some buying. As simple as that. And if tomorrow we get let's say a selling bar like a shooting star, let's take an example. Everyone who is a seller will have a stop loss over here. So you will get stuck in this range. Right now, you can't really plan aggressive because you don't know, where the sellers are going to come. That's one point to keep in mind. But your buyers are over here. As long as this point is maintained, you will always get some buying because their SLs are not going to be hit. So if tomorrow you are getting a gap up, right? If you are getting a gap up, I will say exit your calls. If you are holding calls, any stock you're holding, exit calls, because I feel personally that it will become a choppy kind of day. The reason is the data is showing clients are still holding longs, so you will get selling at upper levels. Number one. The reason also I'm saying is because of this huge selling that has come in. I can also say that people who have missed this fall, they can also try to come in at these higher levels. I would say it's advisable that if you get a big gap up tomorrow, maybe 100 points or 200 points, exit. 15,000 is a big hurdle, round number. If we have to stay in calls, I will let you know on Telegram. But my view would be, if you get a gap up, you would get a choppy trade, ignore. So, but let's say, what if you get a gap down? What do you think? I don't want to spoon feed you. What do you think? Think about it logically. So, for example, let's say who has bought SBI calls. We gave this SBI ICICI call on Friday. If you have bought SBI at, let's say, 365, and SBI opens gap down, what will be your first instinct? You will panic. Why? Because you saw big selling in the market, you saw a green bar, but now when the gap down happens, let's say a good 70-80 point gap down from the highs, you will panic because you thought on Friday it's a reversal, but now it's not a reversal. So if that happens, that could mean that sellers are still intact. People like us who are in longs, we will exit our longs. That will force the price to come down. We will panic. All the bulls will then panic. So what your job is to observe where the markets will open tomorrow. ठीक है? Aggressive trading, I'm not planning. If it opens gap down, you could think so. But again, I'm not taking part unless until this level is broken on a closing basis. All of those who are my mentorship clients already know the rule of two. And this is another thing I forgot to mention, a live practical application, 50-day moving average. Why I'm showing this is because one day we broke 50 MA and today we have gone back above 50 MA, roughly 4 or 5 points up or down. So that's what I'm trying to say. It's not important what happens on 1 day basis, but this region is strong. It could give you a support. I think it's also a very good support on the lower Bollinger Band. So you can see lower Bollinger Band has given support. So now the next hurdle will be the 20 MA. So if what is the 20 MA right now? 20 MA right now stands at somewhere 14,902. So observe tomorrow what is the action around 20 MA. So if you are lucky, if you open around the 20 MA, I would say you can book longs and you could take a short, scalp the market. That's an idea that you could do tomorrow, because if you open up, you will fall down because people will book profit, because we are still scared if it's a reversal or not. Number two, Bank Nifty. Let's open Bank Nifty. So Bank Nifty, what is the 50 MA doing? So we are right now taking a support resistance 50 MA. So let's see what happens at this price. Looking weaker right now, thanks to all the banks which have fallen 10% each. So I would say value stocks are doing good today. Value stocks are doing fine. Consumers doing fine, really, really well. And I think that's the place we should be in right now. We are seeing a shift from growth stocks like banks to value companies like consumer. So that's another idea that I can give you right now. But again, it's the same view with Bank Nifty. If you open a gap up, or let's say if you are opening in this zone, you could basically give a move on the upside, scale the profit, and you are seeing some kind of resistance coming in on the top. I think 34,600 is a level, or 800 is also a level that I'm seeing right now. Strong levels over here, 34,600. Another strong level at 34,800. So we have some levels of selling at the top. So if you are getting a gap up, I think it's safe to say book some profits over there, and you could take a short, scalp it out for a couple of points. If you're opening flat also, I think you can go up, but again then you will come down because selling does exist. But if you open gap down, this will lead to panic, because overall the last couple of days have been down. This could be considered as a pullback, and then markets can continue. So if you open gap down, that could lead to some kind of panic. Overall, Nifty Bank has to be seen in live market. It's been very, very volatile, very, very difficult to trade recently. So I'll observe the live market. Our team is back in action. So any trade ideas that we get, we will send it out to you, just like we do in a live commentary on Telegram. So I hope you have a good day. But I think there's one more point that I want to analyze, which I have not analyzed. So give me a second. I want to see what the 50% is of this fall. Let me open the Fibonacci retracement. We had this very big fall happening. So I want to see what the 50% of this fall is. So this comes up to around 841. So try to observe what will happen at this price. Let's just hide everything else. I'll hide everything else. What I want you all to do is, so generally, if everyone is saying it's just a pullback, generally, if it is a pullback, you should stop at either this level 841 or 957. These are two levels that you should stop. If you are going above 957 and sustaining there for some time, that could be considered as stop loss for shorts. Some important points I'm making, because I will show you how it plays out in the next coming days. So please remember this, note down the levels. This is what I keep on researching about. What I'm trying to explain is, let's take both the scenarios. Let's say this fall is the primary trend and right now is just a pullback. So the pullback should either stop at the levels of, the 0.5 retracement, which is 841, 14,841. This could be a one strong resistance, or you could say 14,957 will be a strong resistance. If you are stopping at these places and getting a negative candle there, I would say you could take a short and scalp it out. I think it's a safe place to go short. But if, let's say, tomorrow you are closing above these levels, then I think we are getting a good bull rally again, and this could fairly be said that we are forming a bottom. That is for your Nifty. Second thing is Bank Nifty. I am not in shorts right now. Please note that I am in no shorts right now. I will play with the market. I've taken some April calls, being very safe about it. Let's take the levels of Bank Nifty. The levels of Bank Nifty, also the similar analysis. Right now, the 38.2% is 34,535. So I want you to see what happens in Bank Nifty on 34,535 and observe at 34,909. That's another level, and 35,283. Please remember these levels. They are exact levels. So, I hope this helps you out. So please observe what happens at 38.2 retracement, which is 34,535, 34,909, and 35,283. So if you are getting a pullbacks only till here and falling down, you can again go to sell in the next week expiries. But if you are breaking these levels on closing basis, then you can say a new rally is starting. So that's about it for now. I hope you like this video. Let me know, and I will see you tomorrow. Thank you so much.